Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. Today's date is March 31st, 2023. It is the last day of the month, the last day of the quarter, and the last day of the trading week. So a lot of last there, and this is the last technical report for the month of March and the last day of the quarter, last day of the week. So let's get started. We'll start with the euro versus US dollar. We did have the core PCE data come out. This is a favored measure of inflation from the Federal Reserve, and the core PCE increased by 0.3%. That was less than the 0.4% expected. So any little bit lower than expectations is good news, but if you take 0.3 times 12, that still gets 3.6%. Still a little bit higher than what the Fed wants for the PCE data, but it's trending to the downside, and who knows, maybe we get a 0.0% or something less going forward. Who knows? Anyway, the 4.6 for the year-on-year, that's sending yields down a little bit. The 2-year is only up 1.5 basis points. It was up about 4 or 5 basis points earlier today. The 10-year yield is trading down minus 2.1 basis points. So we are seeing some relief as far as the yields go after the PCE data. Looking at the euro versus US dollar, we are seeing the dollar move a little bit weaker, the euro move a little bit higher. After the report, this area right down here, the swing area comes between 108.66 and 108.86. We're currently just below that level, currently trading at 108.85 as I speak. This swing area, I'm going to have to put it on a 4-hour chart. If you could look back in time and take a look at these swing highs going back here, and then it got a little bit messy during the red area here, the swing area right through here this whole week, up and down price actions, 4-hour chart. So each of these dotted lines represents a week of trading it took into this week, where we then started to use this area as resistance and then support, breaking to the upside in the process, and then fell back below that level during the same week. It wasn't until recently, the last 2 weeks, that the price reestablished some sort of resistance or support against this area through here. We've been trading above and below it, and you can see in trading here today, the price did dip below that level by a few pips at the session lows, but quickly rebounded to the upside. On the top side in trading, we have this area right through here, where again it was a ceiling. We broke above that level and tried to stay above it right here, and then failed, and then reestablished the level right there. It was last week's trade. We came up into this swing area, and this week, both yesterday and today, the price came right to the low of that area at 109.25 is where these highs occurred this week, and the market found willing sellers against that area ahead of the 39 level. If going forward, if the price were to move above the 109.39 level, that would increase the bullish bias, have traders looking toward this high price back through here. Otherwise, the sellers we have a double top in here over the last 2 weeks, and the bias remains a little bit more to the downside. But having said that, this swing area down here held support. So it's kind of neutral in between this swing area right here and this swing area up here. We will see how all that pans out going forward, but it is Friday, it is month end, it is quarter end, so I might expect that we might stay in between this area and let next week decide which way we break. Do we break more to the upside with the dollar moving lower, or do we break more to the downside with the dollar resuming its bit move reestablishing its move to the upside after the sharp declines seen here over the last few weeks in the month of March as rates came tumbling down. So that's what we have ahead. But right now, the buyers are a little bit more in control after reaching support and finding support at the lows. Let's take a look at the dollar versus yen next. Again, we'll look at the hourly chart to start things off. At least the high price that we saw in trading here today moved up to 133.603. That was short of the 50% midpoint. That's this level right here at 133.769. We were looking toward that level. As you can see in trading today, in between these dashed lines, we had up, down, type of price action. Now currently trading 133.11 after dipping on the PCE data back toward the 38.2% retracement of the move down from this high up here to this low down here. at 38.2, comes in at 132.79, and we dipped just below that level and started to rebound back to the upside. So continuing the ups and downs in the dollar versus yen. I'm not sure if we probably have the low, or we could possibly have the low in place here with and the high in place as well, and may waffle back and forth in trading here today between the high near 133.60 and the low near 133.663 on the downside. So about 100 basis points in between the swings, lows and highs. Currently trading in between those levels, 133.11 for the dollar versus yen. Let's take a look at the sterling versus US dollar next, and this is the hourly chart. And I put in a parallel trend line off of these lows through here, or this trend line through here, and connecting this high. And as you can see in trading here today, the market tried to move above that level, but failed quickly and rotated back to the downside here. So the initial move in the Asian session was the upside, and then back to the downside in the pound versus US dollar. We do have this swing area through here. It goes all the way back to here, where we had different swing highs. And rotated down, rotated down, rotated down. In trading here yesterday, the market moved just above that level and then rotated down and then got above it, and we started to use that level as support to the upside. In trading here today, the market came back into that swing area, sort of the middle of the swing area between 123.43 and 123.60, and rotated back to the upside, currently trading at 123.89 after the softer data, PCE data in the US. So we're seeing the price rebound off the lows. The buyers remain more in control. Taking a look at the daily chart for the sterling versus US dollar, get a view of where we stand at the high prices here today. We did get closer to the double top that we had in the month of December and January. Those levels came in at 124.45 for December, 124.47 for January. And again, the high price in trading here today reached 124.22. So we got within about 20 or so pips, 25 pips of that swing double top up here. Remember that level. It's going to be key going forward into the new trading week. Perhaps move above 124.47 would be more bullish for the sterling versus US dollar. Finally, I want to take a look at the Aussie versus US dollar. I don't know why, because the market's been very volatile up and down, as you can see. If I were to put a box around it, ups and downs, failed breaks to the upside in trading here this month, which took the price to the 200-day moving average on this day and right here, and this day right here, and these are the times the market failed and rotated back to the downside. On our downside, I should have included the price lows down here, but lots of swing levels down through here in trading earlier this week. Could not break below that level, and Monday and Tuesday, and or Friday and Monday, and the price rotated back to the upside. What is somewhat significant from a technical perspective today is that the price did stall against the 100 and 200 hour moving average. On the second test of these moving averages, we did break below it to this swing area through here, but then rebounded back to the upside and then found support. So I would put the buyers more in control in this currency pair against the 100 and 200 hour moving average. If you wanted to do a trade, that this would be our stop level. Stay above is more bullish and look toward our swing highs through here near the 0.6723, 0.6729 as the topside target. So there you have it, a look at some of the major currency pairs. My name is Greg McCloskey. Good fortune with your trading today, and have a great weekend. Bye-bye now.